a verbal update on the metric. So without further ado, I think it's back to you, Linda, just to introduce.
Yeah, just happy to really. So again, another report in my name, but I want to hand over to Mark Finnegan, who is our most excellent Treasury accountant, who will take us through the mid-year update against the Treasury management strategy.
Thank you.
Thanks, Linda. Good morning, committee. As part of its adoption of CIPFA's Treasury Code of Management in the public services, ARAC has delegated authority for scrutiny over our Treasury management strategy and its policies. In January of this year, the committee was presented with our Treasury management strategy for 21-22, which was endorsed and sent to board for approval. This report then updates committee with a mid-year perspective on the Treasury activities and includes a review of our investment portfolio, a review of our borrowing strategy, a review of our Treasury limits, and an outlook for the remainder of the financial year. In brief then, the authority's net borrowing position has decreased by £133.9 million from the 1st of April to the 30th of September, mostly as a result of grants from large capital grants received in advance of need. Investments stood at £429.6 million at the 30th of September, with borrowing of £173.9 million. From a borrowing perspective, our forecast now for the 31st of March is lower than was originally anticipated within the Treasury management strategy, mostly as a consequence of the reforecasting of the capital programme. For the first time this year within the report, we've included a liability benchmark alongside our usual long-term debt profile. And this is a consequence of a review of the Treasury Management Code that CIPFA is undertaking at this point in time and is likely to come into place in 22-23. So the liability benchmark gives us plots the path of our expected underlying need to borrow over time and then overlays it with the amounts we've set aside for debt repayment and our cash balances. So it's there as an aid to the committee for particularly for the future as the code is updated and the liability benchmark becomes more of a guide as to the authority's capital financing requirement over time. We're pleased to report that all Treasury management activities during the first half of the year complied fully with the code of practice. I won't delve into detail on the investment portfolio, the borrowing itself, and I'll happily take questions thereafter. But with regard to the economic forecast itself, as we note in section 9, forecasts remain volatile at this moment in time. Less than 6 months ago, the market was anticipating negative rates. And as we stand here today, there's an 80% chance forecast within the market of a rate rise this Thursday at the MPC meeting. So rates do remain volatile at this moment in time, but they should be taken within the context of historically low rates overall, base rate being at 0.1%. So even with an unwinding this week, that would just bring us back to where we were pre-pandemic, and our independent forecasters only anticipate gradual rises over the course of the next financial year, up to perhaps 0.75% by early 2024. As I said, I won't delve into the detail. I'm conscious of time, so if there are any questions that members would like to ask, I'm more than happy to accept them.
Thank you, Mark. Just so all the members of the committee are aware, having received a copy of Mark's report, I had an exchange with him raising a few questions I've got, so I've got nothing further that I personally wish to raise. Unfortunately for Mark, whilst I'm an auditor by background, my great love in life is economics, so I do tend to engage slightly more on some of these topics from interest as much as anything else. And as you observe, Mark, it's a pretty fluid and dynamic world. And I did go back and read your report from January, and obviously what was being projected back then compared with what is being projected today is, at one level, has changed in terms of sentiment, but in terms of the historical position, it is, as you say, still abnormally low in terms of debt rates and everything else. But no, I found the report very helpful. Thank you, and you've answered my 1 or 2 points of clarification in the discussion that we had offline. But open it up to other members of the committee. Obviously, you were here for the previous discussions of the presentation and approval of the policy in January, and so interested in any comments. That's the warranty. Yeah.
Thank you, Chair. Well, I actually wasn't one of those members. My first meeting was actually, I think, your first meeting as well. So, or certainly in-person one. 2 points to raise, really. One of it looking at, so in 9.2, you particularly draw reference to this about the base rate being below 1%, remain obviously highly unusual and highly supportive of economic growth. What plans, what mitigations have we got in place for when the base rates do rise? And from reports, I'm seeing suggestions that those could raise quite considerably in quite a short period of time, as some of the latest reports are suggesting. So that's part one. And part two looks at it, I don't think it's detailed in the report, but what if any internal borrowing we are doing as an authority as a way to reduce some of our reliance on some of these external borrowing and keeping the cost down as well. And what if anything we're doing on that, and whether we could, whether there's anything more to look at that. So that's the sort of two questions in one there, Chair.
Thank you. Happy to take those questions. With regard to the likelihood of base rate rises in the near term, the majority of our portfolio is very short term. And is laddered in such a way as maturities are falling off month on month. So we're able to rise with the yield curve should we get rate rises occurring over the next few months or so. So we are positioned in that sense not to be overextended long term and to take advantage of any rate rises as they may occur, and also to take advantage of market expectation actually ahead of any real rate rises themselves. We are already considerably internally borrowed to the tune of several £100 million. So much of that is based on the fact that we have large grants received in advance, and we're able to utilise that cash to offset the need to borrow in the near term. But obviously we have to weigh up the balance between keeping that internally borrowed position and the historic low rates that are available at this moment in time within the marketplace, and choosing through sensitivity analysis at the point that we engage to realise that long-term debt because of our capital financing requirement. And that's an ongoing sensitivity analysis we undertake with our independent advisors.
Thank you, Chair. If I could just come back on that. I couldn't see anything specifically in the report about our internal borrowing position and our net internal borrowing position. And it might be helpful, with permission of the Chair and if agreement with the panel, that perhaps we could actually have that included future, so we are aware of actually not just our external liabilities but our internal liabilities as well. Just something that I find particularly helpful on a home authorities audit committee which I chair. So just an observation there. Thank you, Chair.
Okay. Mark and Linda, you're happy to provide that in fact, I think it'd be helpful if could you provide a quick update as a consequence of this meeting? Just to provide
not a problem. Yeah, of course, I certainly can do. I can certainly say that at the 1st of April, in terms of values, our capital financing requirement was somewhere close to £470 million, whereas our actual borrowing was £129 million. So I'm not going to do the calculation on this piece of paper with me straight away, but the difference between the two will give you our internal borrowing position at the 1st of April. And I'm happy to update with values from the 30th of September within a brief update to let you know the movement over time.
Okay, thank you very much indeed. Other questions or comments on the Treasury paper?
Just, I think this is very satisfactory, I should say, the way it is. And looking at the chart of liability benchmark and so on, I was just trying. First, I was trying to figure out how long is there just one or two items of long-term loans which are quite from 21 to 2056. I'm just trying to figure out how many loans are actually involved in it, or though it's the right way to do it, to follow it up. I just want to understand, we have 30 years or something, loans, something. So
I was looking at the chart just above the loan maturity profile, which sort of gives you a pretty, the sort of chart above, the bar chart above gives you a very helpful, I think, analysis of that profile going forward.
It is helpful, yeah.
Anything else, Mark, you wanted to comment on that?
So I've got.
sorry, just also mention while I'm there, it's 8.3 is very nicely written down. I know it's not helpful to us at all, but at least it's explained. Yes.
Okay. Other members of the committee, any other questions on this report? Okay, if not, thank you, Mark and Linda. So a helpful report. So if we just address that point on the analysis of the internal borrowings, that'd be great. And then, as you said, as you reference in the report, potentially important decisions to take before 31 March 22, which therefore we need to come back to in the new year.
Yes, most certainly.
All right, fantastic. Thank you very much indeed. Thanks for joining us.
Thank you.
Thank you.
Right. Single assurance framework. So, thank you for joining us in the room. Talk about the single assurance framework. Thank you.
Is it okay if I just come in on this one, Mark? So I think again, yes, it's sort of a bit like the Finance and Business Hub show today, isn't it? So we've got an awful lot of reports on the agenda from my directorate, but a really useful report and a timely update, I think, here from Jyoti and Ian around the single assurance framework. So it's going to give Jyoti will go through and give you an update on where we are and on the process and the rollout. I think critically for me, if you'll remember, we had an update a few committees ago around the changes to the organisation, and we've developed the Finance and Business Hub, essentially, which is the directorate that reports to me. And what we've got within there is some key critical enabling services, which is the end-to-end piece, really, which is about planning, performance, resourcing, finance, procurement, appraisal and assurance. And what that's helping do by having all those functions within the one directorate, it's helping that cohesion and that connectivity and that forward understanding of the activity of the organisation, which is really in turn in this specifically instance helping that forward pipeline of work and the visibility in terms of what needs to come through in terms of Jyoti's team from a corporate assurance perspective. So I'm really pleased to report the progress and the improvements that Jyoti's going to touch on today. And I just think from my perspective, it's just worth me reassuring you that from a senior leadership team perspective, Jyoti and Ian did come to SLT a few weeks ago now. And again, Jyoti will talk about this, but actually we have a firm commitment from the executive team of the combined authority to support Jyoti in this continued rollout. But I'm happy to hand over to Jyoti and Ian.
Thank you.
Thank you, Linda. Thank you, everybody. So I'll just talk briefly through the report, and then I'll accept any questions and queries that you have on the content today. So as stated in the purpose section of the report, this was really a request from the Audit, Risk and Assurance Committee some time ago for my team to start presenting thematical quantitative information to the committee. To be able to demonstrate to ARAC that the West Midlands Combined Authority was committed to transitioning onto the new single assurance framework arrangements. Just a very brief reminder because there's new membership around the table today. The single assurance arrangements were updated for the Combined Authority and approved by the board in September 2020. The new arrangements were part of our commitment to central government, so the new arrangements align to H&M Treasury Green Book, and it's a real game changer in terms of the arrangements that we had in place before and the arrangements which we needed to strengthen. So I'm pleased that the refresh was undertaken, those arrangements were strengthened, and this will really drive the quality development of better, robust business cases being developed with the opportunity of strengthening our project management arrangements and understanding the risk position. So section 4 in the report does highlight the achievements that have been made to date. The initial intention was to roll out the revised assurance arrangements to the investment programme. So I hope the content reassures the audit committee that progress has been made as intended for that original objective. And as Linda stated through the business transformation review earlier this year, the intention was to roll out the new arrangements to the wider devolved project portfolios. And so through commitment from the executive, the strategic leadership team, a plan is being developed in terms of how we can now roll out those arrangements. The content of the report and the thematical and quantitative information demonstrates where we have rolled out the SAF arrangements to date, and that provides real insight to how we can drive quality improvements to the portfolio, which will drive forward going forward. And again, as stated by Linda, there is a commitment from strategic leadership team to champion the transition, and there'll be monthly updates provided to the strategic team regarding progress. A detailed progress and issues report was presented only a few weeks ago. And so again, that should provide assurance to the audit committee, the fact that we are transitioning and there is a commitment to transition to the other portfolios. Happy to take any questions.
Thank you. Well, I completely echo the comments of my predecessor that it's great to have a framework, but it's even better if it actually gets applied. So, it's obviously encouraging to see it being applied in practice across this period. I didn't really have too many specific questions on the report. It was a really helpful report. I assume very, very clear. My only tiny quick question was on 3.3, which is the analysis of the 7 projects you looked at. You referenced commercial being a little bit, but if I'm reading this right, it seemed to be suggesting certainly projects 3 and 6 where financial, projects 3 and 5, sorry, where financial was significantly below what you would expect from a maturity assessment. Am I reading that right? Got to read that graph.
It is. What I've had to do is retract the actual project names. So I haven't got the specific detail of which ones they were. But this was a maturity assessment at that point in time.
Right.
And some of these business cases which went through the single assurance framework needed to be developed in tight time frames. However, this was the point in time. This was an assessment at that point in time, and what the assurance indicator would then do is highlight the recommendations of where they would need to be strengthened. So they would have met the required benchmark from that particular perspective, but where there were gaps and where it came back as a low maturity assessment, those recommendations would have been fed back to the project team and the relevant internal SME to strengthen those particular areas. But the framework that we are using is what the government would also use to assess the business cases. And so this is our opportunity from a CA internal perspective to almost review submissions before they go to central government.
Yeah.
So it's a positive enabler to help strengthen the business cases before they are submitted.
Thank you.
Yeah, I'd just like to add to what Jyoti's saying about that. The first thing is that if everything was perfect, there'd be no need for SAF. So that's
your objective.
Yeah.
Okay.
The great thing about ensuring that we've got this second line of defence really in a risk system is to be a critical friend, is to add that bit of expertise and a secondised check on projects to ensure that people who are very close to a project don't get so close that mistakes are made. So in some ways you can say if there's something that you're flagging and it can improve a project, that is a success. So kind of it needs to be seen that way. The second thing to say is that a lot of projects that we're assuring are quite early stages.
Okay.
So we've got the 3 levels of business case, to put it really crudely, at the SOC stage, going through to outline business case, going through to full business case. Okay. Quite a few projects, quite early stage. Now, if you look at it under the 5 case model, you would expect, or at least hope, that every project that we start should be aiming at our strategic and economic objectives, so that those should always be scoring quite high. But early stage of the project, the commercial piece about exactly how it's all going to come together, that often is a bit lower because there's detail still to be worked out. It's only really when you get to an FBC that you should be really seeing that fully worked out. So it's not I think what you're seeing is accurate, but what you're seeing need not necessarily be read in a bad way. It would be, for me, it's encouraging that we get that input.
Okay, I'm not suggesting it's necessarily bad. I'm just flagging the report highlighted commercial as being an area where it was less developed, and actually my reading of the graph was that financial was in a similar place.
Yeah.
That's all that was observed.
Yeah, absolutely. I just wanted to kind of flag it, Brian.
That's all.
Thank you, Chair. Yeah, I think it comes on to the point that you've raised, particularly about, as you say, that graph. And I understand the points made, but actually we don't, but the problem I think we've got here is we don't know the context of those 7 projects that have been presented to us here between April and September 21 in the graph on at 3.2, 3.3. And I think that's part of the problem here, that we're kind of looking at this, and as the Chair said, certain areas look lower, but with that explanation of it's helpful, but then we still don't know whether those are, because for example, if you look at project 1, if that was at a final stage business case, I'd be having question marks about that one, for example. So I think it would help if any future reports we could have that slight more level of detail as to assure us that those projects, you know, project 1, you'd probably be looking at, you know, if you want my opinion, you'd be looking at a soccer initial business case. Obviously, we just don't know that's the case here or not. So a little more context in that respect would be really helpful for future.
I'm happy to take that away.
Is that okay? So you could, if you literally outline whether it was SOC, SBC or FBC, that might just give a little bit more context for it. But as you say, you know, at the end of the day, this is here to add value, to provide a bit of independent challenge, and if that's what it's doing, as you say, if it wasn't finding anything, then it wouldn't necessarily be the value that we're hoping it's bringing. Yeah, exactly. And it's not often you see a report, as in 5.5, that references contribute massively. Massively is a great word. So I like the emotion behind a word like that. Other questions or comments from other members of the committee?
I think it's very visible. Normally you see reports, a lot of text, but not graphical. Yeah. So Jyoti, well done. So I think, you know, obviously it's a process that started off. So in future we'll empower more improvements. Yeah. So well done.
Yeah. Thank you. No, I'd say I said right at the beginning of a helpful report, and yes, I as a general theme on reports, you know, anything that has diagrams in or pictures in, I always, you know, we saw it earlier with the strategic risk register, the way that was presented was very easy to follow. Yeah. And the Treasury report actually as well had some useful bits of analysis in as well. So as a general theme, I'm very supportive of that style of presentation. So thank you. Other questions or comments? Any other bits and pieces? Obviously, we're having a meeting straight after this to go through it in a bit more detail, so I'll just get myself up to speed. But other members of the committee? No? No. Fantastic. Thank you very much indeed. Thanks for the report and thanks for joining us, and I'll see you shortly.
Thank you.
Very good. Thank you, Linda.
Thank you.
Right, this is the bit I don't understand on the agenda. So do I have to invite people who are members of the public to now leave us, if there are any members of the public?
Yes, it is where we move into private session.
Yeah.
So at this point now, because I record the meetings, I will stop the recording. So,
okay.
and we're okay. So
okay, I didn't know there was anybody on the
recording now.